Okay, good gracious. Good gracious. Hello, welcome everybody. It is Wednesday, the first day of spring. Thank you for being here. Sorry for the delay. I've actually been here. I was, I don't know if you want to call it screen staring, but I was checking out a couple items here. First off, how's the quality of the sound? The quality of the trade room should be light speed better than any product that we've ever used before, and we're very pleased with the transition from our old school trade room. So first and foremost, can everyone hear and see me? It's kind of like the did we start playing the Tommy Can You See Me, Tommy Can You Hear Me thing? That thing, the song. Tommy, can you see me? You got to be a Who fan for that one. Or you have to be slightly south of, well, never mind. We won't get into that. As a cute story, there's a song on the radio, Ariana Grande, and it's thank you next, or thank you next, or something, or thanks next. And I'm listening to the song with my granddaughter in the car, who's obviously into that stuff. And I start going along with the song, singing steak and eggs, steak and I'm like thinking, wow, who the heck would put out a pop song singing steak and eggs? And she just is laughing at me like I'm the biggest idiot in the world. And because it's not steak and eggs, it's thank you next. But if you listen to it, you can clearly hear steak and eggs, to my defense. So that's the anyway. I guess getting old is something there. But the one thing about getting old is you have experience behind you. So the first thing I went on a tangent about listening to the Who. Today's presentation, folks, a lot of you guys came in from Thinkorswim and saw me at the New York Traders Expo, where I gave an intro to algo trading, and I said there's a few things on Thinkorswim that we would cover in a follow-up webinar. For one, I talked about a couple indicators on our Thinkorswim platform under my name, which I expressly use on other platforms, namely my stuff on TradeStation. First and foremost is how I use the scans on Thinkorswim. Second off is how I run the relative strength for stock trading, and to get an idea of where things are relative to under and outperforming of a market. So with that said, the other thing that we talked about was and I want to share this with you because we're going to go right into this, is my planning and scanning, and I'm not logged into my own thing, so we'll close out of that and get back into that. Let's see if I can log into my own website. That's pretty crazy, right? I think I know how I can get in. So here we go. We'll use a little login. First thing foremost, we have this little click here for the trading room. We have a live trading room, and that's what you're seeing, the platform that we're using right now for today's webinar. There's usually a video report that we give out every week that defines what we're looking at for the week. And we also have a weekly report. And again, all of them are archived. And I want to go through the weekly report real quick, because this is part of what we talked about in New York City. So if we click on the weekly report, it will come up as an attachment in a PDF. And I'm going to open that in a new tab. And then we'll get right into finding what the heck this thing means in just a second. And it opens up in monitor number 4. So let's bring it back over to monitor number 2. All right, there we go. Couple things that I talk about here, and we get some information about what we utilize in stocks. We have some equities that we're looking at. We have a performance. We look at, some of you guys may not know this, but we were talking about this in New York City last week. We dumped a bunch of stuff on option expiration Friday. And we've had a pretty good run this year. Now, this is a stock equity based trade. Normally, we're not as involved with options looking at equity based because that's the format of this advisory service. We give a top-down approach to the marketplace. So I just thought I'd explain that, number one. Again, different how you trade the market is there's 10 different ways, 1,000 different ways you can trade the market. We want to just trade the market with the best odds and edge possible. What tools help me get that best odds and tool possible? Well, we have 2 rooms running at the same time in our live trading community, by the way, just so that you know. No longer do we have 1. We have 2 rooms. This is actually the page that we had projected for today. And what is that important to you? Because a lot of the stuff that we get from my methodology, we use in, again, Thinkorswim. So many of you are Thinkorswim users. Today's focus, by the way, was, believe it or not, in energy, because we noted that energy was picking up earlier this morning before everything started. And I want to bring a couple of good news, bad news, and we'll start with good news first. So this is Thinkorswim. We're not switching. We're not using anything else. This is Thinkorswim. Believe it or not, this is, you can see at the top, Person's pivots. I have 2 lines in the sand here. I have the person's daily pivots overlaid to the weekly person's pivots. And this is a 15-minute chart, and we'll change this to an hourly chart so we can get a little bit more room in here. And so now that we take a look at the marketplace, how do we focus in on what sectors are moving up? I mean, that's important, right? Because if you were looking for a trade today and you're saying to yourself, well, what stocks look good relative to, or sectors look good relative to the rest of the market? So you take a look at this chart and you'd say, wow, it looks pretty impressive. The graph below is a tool. It's not mine. It's on balance volume created by Joe Granville. And that is a tool that depicts volume as a trend, measuring the rate of change of the volume, comparing an up period versus a down period. So if it's an hourly chart, it's comparing the volume and the volume readings and assigning a positive to an up bar or a candle that closed, or a bar that closed higher than the preceding time period versus a down bar. And so the value is assigned up or down and it trends. It's a lot better of a tool. It's not perfect, but it's a lot better of a tool to help to show, is there strength, is there accumulation, or is there maybe divergence patterns? Now, for those that may be new to trading, I'm going to define what a divergence pattern is. Anytime we get a market, and we'll go back over here to a daily chart, when the price of a market, like over here, makes a newer relative high and the indicator makes a lower relative high, we call that a divergence, because the prices make going in one direction and the indicator is going expressly in another. So you can see that the trend of the volume is moving down while the price is moving up. And divergences are very important to find out if that is a real high volume breakout or a false breakout, which would give the inclination that the market could pull back. One of the things that I look for, and the tools in Thinkorswim that I use expressly day in and day out for our not just our trade room, but also for my own personal trading, as well as even in a managed, well, that's a different story, of trading accounts. What we do is we use this little tool. If you go over here to studies and you go to add study, you find my name, John Person's Indicators. And there's only 3 tools there. PMC, we're going to cover that today. The PPS, which is pretty self-explanatory. It's a person's pivot study. It's a momentum indicator. It paints buy and sell signals on the chart. We'll go through that. And then person's pivots. And that's what we're covering right now, person's pivots. So how I use person's pivots is simply this. If the market is truly bullish, if a market is bullish, typically, and we can overlay what pivots are, but I'm going to get just right to the point and tell you, why do I use Person's pivots? And what is the main function of using Person's pivots? Person's pivots is a filtered product of pivot point analysis. Pivots are derived from taking the high-low close divided by 3, and that gives us typical price. If the weekly outlook, and you can see that coming into this week, defined by a pivot point is the blue line in the sand. So we have broken down the pivots to 2 time frames, weekly, and you can see it right up here, weekly and daily. If the weekly is projected, if the market is truly bullish, a couple things happen. The fuchsia color are daily pivots. So that's a daily pivot, and that's a daily pivot, and all of a sudden that's a daily pivot. If we get the market trades above the typical price or the pivot point, as I've written in every single one of my trading courses and every single book, it's expressly stated that the pivot can act as a resistance in bear market conditions and a support in bull market conditions. It also can act as we can use it as a moving average value. So in this way, we can say, instead of having a bazillion moving averages and everything else, I just want to know if the market, and what is unique about pivots is that they project the next time period at the end of the period that we're in. So daily pivots right now are already calculated for tomorrow. So let's go over here, and I think it's under, is it appearance or is it time axis? And expansion, time axis. If you go up to time axis, or let's start over. If you click on chart settings and go to time axis, expansion areas, it's set at 0. Let's change that number to say 5, just for the heck of it, and see where it says expansion area, 5 bars to the right. And I hit apply and I hit OK. What it does is it gives me freedom, or it gives me free space, 5 bars to the right. This is Marathon Oil. This is a stock in the energy complex. And what it's done is it is now shown that the weekly pivot, which I've already overlaid with a green line because I'm happy-go-lucky with the drawing tool, you'll notice that the weekly pivot is higher than the prior week's time period pivot. Notice that at the end of the week, it gives a calculation at the end of the time period what the next time period's projection or target is. If a market gives you the reading that the pivot is higher than the prior time period, it's giving you a bullish outlook. Now, here's something that I don't often talk about at all, but considering this is a webinar for customer appreciation for Thinkorswim, I want everyone that uses Thinkorswim to see the relevance in how we utilize the higher time frame versus a lower time frame. If the weekly is projecting, and so we all are on the same page. I want to make sure I didn't go too fast. I don't want to make sure that I'm getting scatterbrained and going all over the place. I want you to look at this indication right now. So, or what the indicator was suggesting coming into this week. All right. So let's take a gander here together. And let me just go right here. And we're going to cut it off right there. So Friday, the market from the prior week had kind of like a lower projected weekly pivot. And what happened? The market went up. And then that next time frame, so this would have been Monday's trade, Tuesday's trade, and then at the end of the day, Tuesday, it projected that the Wednesday pivot, daily pivot, was now higher than the overall weekly pivot. Did you see that? That's a short-term, long-term analysis. That right there, my friends, is an indication that there's a change in the market valuation and outlook. When I see that type of scenario, when I see prices get above not just the weekly pivot and the daily pivot, but when I see the daily pivot trade above weekly pivot with a strong accumulation or increase in volume, it certainly supports the idea that I should probably not be selling short the market. It's showing me that there is a directional change in the value mathematically calculated. High-low close divided by 3 is your pivot. Price is trading north of the pivot point. It's trading north of not just its daily pivot point, but a weekly, a higher time frame. So for swing traders, this is a very powerful observation. A swing trader at this point, if you're trading marathon oil, if this same scenario was lining up with Netflix, Tesla, anything that you're a momentum high, or at least a liquid option strategy, or an option, or a stock that has liquid is optionable, is a better way of phrasing it, then I would say this is a bullish outlook on a swing trade basis. I know that the market, as long I don't know how high it will go at this point, I just know that they're starting to show strong accumulation in the volume. Does everyone see that? So we have Kristen San is good. We had Sherry should I be hearing some audio? Yes, Sherry, you should have been hearing some audio. Sorry about that. So Tim says yes, yes, yes. Okay, so this is kind of a good indication. We don't have any other indicators. I don't have MACD. I don't have stochastics. All I'm looking at is a math calculated model that suggests the market has been in a choppy range. It dropped like a rock. Somebody, and by the way, here's a classic bullish convergence pattern in the energy. Does everyone note that from the time that the low was made here to the low in price over here, price went down and the volume trend went up? That is a classic bullish convergence. It shows that that low won't hold. And then all of a sudden we started to see the market trade back above what? A pivot. It traded above pivot. And then finally, it didn't just trade above its daily pivots, it closed greater than the weekly pivot point. That is a strong indication that the market is in a bullish bias. And by the way, the volume broke out and made a new high. So in today's lesson, how do I utilize one tool with another? Person's Pivots is a dynamic tool that is expressly underrated, misunderstood, and people think it's a free gift of looking at highs and lows. And that's not exactly what it is. Let me go over to studies, and I'm going to add studies. I'm going to show you how to put this indicator on your charts. So we're going to add studies. We're going to go to John Person's indicator, and we're going to go to Person's Pivots. Now, what I just done is I've just added Person's Pivots. And you go, well, wait a minute, there's a fuchsia color, there's a green color, there's purple color still. What does all this mean? By default, go to studies and edit studies. By default, it gives person's daily pivots. So if you want to change that to a weekly, you go to a week. If you want to change it to month, change it to month. If it's a stock that is highly liquid in options, or an optionable traded product, or an index that pins against at option expiration, then you probably want to prefer to use option expiration. Let's just click on that. Everyone see where I got that? Option expiration, and I hit OK. I'm going to hit apply, and I'm going to hit OK. The only thing I've just done is I've added option expiration, higher time frame pivot to my charts. And there it is. You will notice that the pivots, while as good as they are in detecting the trading ranges, right? I mean, here, this is not bad shooting. If you were at the end of the month, it projects that's going to be the high. At the end of the month, it didn't get up to that high. But what did it do? It pretty much held support of the pivot. And here's the other month. And then it stays within a range. It almost adjusts to the ranges like average true range does. And if you'll notice, look at the support. Wow, comes right down to support and holds resistance. And look at this. How nice is that to target at the end of this month and saying, gee, sometime next month when the market gets up there, watch to see what the tape action tells you. If it hits that resistance, you may not want to buy, or if you bought a breakout, that might give you a good target of profit taking. Important. The support holds. So more times than not, it does a couple things. It gives good, accurate readings of what the predicted support and resistance will be within a time frame. And it does so better than looking at Fibonacci more times than not. And one of the reasons is by the time you figure out what the extension is, if this is the high and that's the low and you got a Fibonacci and you're going to use an extension, well, I mean, I already have that information at hand. And then if this is, and I'm not saying there is a lot of times crossover. There's a lot of time with Fibonacci work. It is redundant. It's not as accurate in my humble opinion. And I've only used every form of technical analysis for the last 38 years. And I find it not as efficient. I mean, it works. It's okay. It's good at certain times, but I do not find it as efficient. So that's just my 2 cents. I'm not here to talk what doesn't work. I'm only here to share with you what my indicators do and how they work. In a product like Marathon Oil or any stock, and the only reason, once again, if you've come late, that we're talking about Marathon Oil, in our live trading room today, we were focused on energy outperforming relative to everything on the board today. And actually, that's exactly what happened. I'm also saying and sharing with you how did we come to that conclusion and what we look for using the tool called Person's Pivots. So A, we can see clearly that when a market is below its pivot, like over here in January, when the market closes greater than the pivot point, the blue, or in this case fuchsia, markets tend to rise. I just made a comment earlier that in a strong bullish market condition, it is the pivot point, not the support, that can act as the time period support. So let's expand upon February 11th, and I'm going to go over to studies. I'm going to edit studies, and I'm going to edit the person's option expiration for eliminating the resistance. And you see where it says show plot, I get rid of it. Resistance, get rid of it. I don't know what this is. RR is the automatic calculation. I'm going to get rid of the support. I'm going to get rid of the support. I'm going to get rid of, I don't want it to show it. I don't want it to show it. It doesn't. And I want the pivot point. And I'm going to change that to, let's change that to, let's choose a orange color. There we go. Hit OK. And let's hit OK. And we're on apply and then hit OK. All right. Now, let me get rid of my drawings so we don't confuse things. So we're going to focus in on this situation right here. We have we have 3 time frames on our charts. First, we have option expiration pivot point. That's the orange line. It's just the pivot point. We have the weekly pivot, which is now blue. And the little dots are hard to see, are daily pivots, right? So my point that I was making about the market condition right now is that if the market is expressly bullish, the actual pivot point becomes support for that time frame. You notice that market held the actual pivot point on option expiration, and currently, look at this, gang, the current option expiration, because option expiration just happened Friday. Look what Marathon Oil is doing. It's like stair-stepping. It's pulling back into pivot. Now, as a momentum trader, I want to know what is the condition of that rally. If the market is stair-stepping and it's pulling back into support, is it stepping in with huge decline or acceleration in volume? And the answer in this case was no. Do I catch a falling knife? Because I don't know if it's going to continue to fall or not. No. But a good setup would be if the market closes greater than its pivot points, and if it closes greater than the current or shorter term time frames pivots. If you notice here, the weekly pivot is still above the longer term option expiration pivot. Does everyone see that? These blues, the blues, the blues, that is still above the higher time frame weekly. When the short term, let's call the theory, short term moving average is above a longer term moving average, market is deemed to be in a more bullish environment. To support that idea, ladies and gentlemen, if the market, like back here on February 11th, it falls to support when it closes greater than its short-term pivots, and the short-term pivots are above a higher time frame pivot, it does give you the inclination that you should be long the market. So now I'm going to change this to a intraday time period. We'll go to 4 hour, and we're going to scroll back and go back and revisit this time period right in here. This is not just a case study, but this is exactly what we use for making determination in today's trades as well. So here we have a market that holds long-term pivot and closes, it bounces off of it, and what does it do? It closes above its weekly pivot. You see these dots? Those are your daily pivots. There are only 2 dots because I'm using a 4 hour chart. So to make things a little bit better, I'll use a 1 hour chart. So let's go again and look at, if it will let me, I have to go over here to, I think it's style, time frame setup, and I have to go 1 hour time frame. I'm going to go 90 days. There we go. All right. Now we can see this. This is what we're looking at, right? So if the weekly pivot is still holding above a longer term monthly or option expiration pivot, it's giving you the supposition that the market is still in an upside market condition. That's interesting, but I would be more impressed just because the pivots are above there when the market starts to trade and close above those levels. And that's when you could see that the market is now, by valuation, it is by using a calculation method of where's the close in relationship to its high and low, not just from last week, not just from the day before, but from the prior months or time periods before. When those time periods are showing or reflecting higher valuation and the price is closing greater than those levels, that's when you see magic happen. And today we had another situation just like that, and is exactly what we were talking about. Option expiration, it pivots down here. Our weekly pivots above option expiration, and we were calling for the market to close greater than this line in the sand. So a lot of people, we looked and saw that after Jerome Powell was talking, boom, this market broke out. That was one of our setups today and what we look for in the market. So when you come into a webinar, you say, well, what are you using for your information? And what are you using to help derive your trade analysis? As you can see, this is exactly, and I know how many people were in the live trade room today. If you are there, raise your hand or just say yes. You guys are still wanting to hear my voice? Are you serious? Thank you, Andy. Thanks, Don and Scott. I can't believe it. Wow, thank you. So this is pretty much our board for today. And Blake, you too. I can't believe you didn't say, can't take John anymore. There's too much of John. It's like chocolate cake. He's good, but I need milk to wash it down with. So the moral of the story is, ladies and gentlemen, we do get a systematic change. Energy today, whether it was 2 stocks that we were really focused in on that looked the most impressive on the board. One was Hess and the other was Marathon Oil. Now, we have several things up here. SDS, which is an inverse ETF. And today was a little rough and rocky for the market with Jerome Powell. We came into a lower open. We came into the market teetering back and forth. It shot up. It broke down. SDS, the market had a big rally after he talked, and then the market kind of scratched its head and said, wait a minute, maybe this is what the market's thinking. He's not raising rates. He's citing economic weakness. Boy, if this deal with Trump and China doesn't go down, this market, this could be a problem. Maybe that's what the market's thinking. I do know this, that we had a couple things on our board that we were looking to take advantage of today, which it didn't materialize. We did not get a breakout in LABU, which is the ETF on biotech. And if you notice something here that's interesting, the volume trend is breaking down. So that's number one. So if the market is truly bullish, we're going to want to see the market do what? Break out, support, and generate higher highs. We haven't seen that occur. So LABU was one we were looking forward to see if we could get some upside. The next one here to talk about in the banks, and this is a great segue because last week we had a great little trade set up short term for Wells Fargo, and I've tweeted this out. You may, if you look at my tweets in the past, you will see, oh yeah, John talked about a couple stocks, Wells Fargo and Morgan Stanley. And, you know, relative to the rest of the world, those stocks did pretty well. If you're not familiar with that tweet, I will share that with you right now. And if you go over to our little Twitter tweet logo up there, a couple things you will see. You go down here and you would see that last week we were giving out financials are breaking out on March 14. XLF, FAS, Wells Fargo, and MS have positive RS, and energy is now starting to perk up. And so we were in an XOP and we took about 3.5% out of that trade and we hit the road. So where did I come up with, if you don't know what XLF or FAS or WFC and MS stand for, that tweet probably didn't mean much because most of my tweets are not about, except for that. That was one little tweet that I did send out when I was in New York. Our little puppy Sita missed us. That's my bestest pal right there. But for the most part, a lot of stuff that we do, and I send tweets out, and if you were at the Traders Expo, they took that photo of me, which was nice, and we were talking about this person's pivot indicator, and that's why we promised we would do a follow-up webinar on how to utilize it better in Thinkorswim. So I'm looking for if the market is holding above its pivot. Oh yeah, person just covered that. And if the market is truly in a breakup mode with strong volume and improved relative strength, then we should see a market move up. So for swing traders, this is a dynamic way of looking at the market. What about for position traders? Same story. So we look at person's pivots and we look at the market in essence of looking at how the relationship of the close is relative to the pivots. When you get a market that breaks out above and closes above its pivot point levels, its fuchsia line, the pivot point, we look for if volume supports the notion that the trend could see some upside, we can take short-term or long-term trends, depending on your outlook, and go with the momentum of that trade. Half the problem is not your entry. Half your problem is where do you get out? That's the age-old question, usually speaking. Where do you get out of the trade? If you don't get out, if you get out too early, you get out too soon. But getting out with a relative decent profit is okay. But understanding when to get in, that's even more than half the battle. So if we can determine that the market is strong by closing greater than its pivot, and if we get another tool, which is this relative strength, which we call Person's Market Catcher, PMC, it will help us to understand the phase of a market. So right now I'm going to segue into, I think you heard enough about the pivots. I just demonstrated how to get them on Thinkorswim through the study tool, and also how to integrate multiple time frames, comparing the current day to the week, comparing the day week to the month. If we have pivots, and generally speaking, look over here. If the market's truly bullish, it shouldn't be trading below its pivot. If the market's truly bullish, it shouldn't be trading below its pivot. In other words, if the market's bearish, the pivot point, that fuchsia line, is going to act as resistance. Look at this, gang. Here's your pivot point, right there, the green line. Resistance, 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 and it went down more. All of a sudden, when the market started to close greater than the pivot, when the market started to close greater than the pivot, when the market closed greater than the pivot, not the support, the green's good too, but generally speaking, if the market's in an uptrend, it supports prices stay above the pivot. That's the part that a lot of people miss with Person's pivots. Person's pivots does a great job of filtering out and predicting, hey, the market's bullish. It's going to target a higher high and a higher low. And if the market supports the idea that it's bullish, then it should what? On an intraday basis, it should stay above its pivot points. We had for Forex traders, I don't want to harp too much more on that, but let's get into looking at the euro currency. Now, on a humorous side of life, I generally am invited to go to this, and let me go over here and we'll go into one last example of Person's pivots real quick. We'll go to studies. We're going to edit studies, and we have Person's weekly pivots. And I'm going to do one other little thing for you. We're going to change the weekly to daily. All right. So let me change this to a daily. And there we go. And we hit OK. Now apply it and OK. So this is the euro currency. And here's the humorous side of life. Usually this technical analysis conference, since I've been invited to going since 2007, and in fact, it's the Paris Technical Analysis Conference that in 2008 they awarded me by People's Choice, and the Technical Analysis Society there gave me a gold trophy due to my work with Person's Pivot Indicator. How about that? It is their 20th anniversary. They invited me back due to their 20th anniversary, and every year I've been there. And of course, my wife loves to join me to go to Paris. When I have to go to Singapore or Beijing for 2 days, she's not interested in that trip. But Paris for a week, she's on board. I don't know. I wonder why. I haven't figured it out yet. So every time we go, though, the euro currency rises in March. And this conference is always at the end of March. And I've been talking to our trading community. I said, believe it or not, seasonality, the euro currency goes up. It goes up. It goes up in the end of March. And we've been stalking and watching this euro currency. And the funny thing is, this was the day Mario Draghi had announced that the ECB is, not going to eliminate quantitative easing as much as everyone thought, blah, blah, blah. Well, you will notice it may be hard to see through all the lines here, but there's a little buy signal. That's the PPS indicator, guys. But we're focused not on the PPS right now. We're focused on pivots. Let's take a look at the end intraday time frame of, let's go with the 1 hour chart, and let's look at the theory that I've just talked about with you about pivot analysis. And I'm going to go to studies, and I'm going to edit studies. Let's just get rid of, shall we, and go over here to the cog wheel, and let's get rid of the, I don't want the support. They're nice, believe me. I still find them valid, but I'm going to get rid of them for today's presentation. And let's look at this. And we'll hit OK. And we'll apply. And we'll hit OK. All right. Now you can kind of see through the light a little bit. Now keep in mind, we had a rollover. So this was the March contract. This was the June contract. And trust me, rollover is a pain in the neck for algo strategists. Trust me. So here's an interesting concept. We're looking for the market. If the market's truly bullish, the market will respect its pivot. If the market's bullish, the blah, 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 right? All this time period, the market has been trending up, and it's been spending time north of its pivot, So even the euro currency, from a seasonality approach, looking at this market, that pivot point has been acting as support. So using it against a 1 hour time frame, probably not as efficient, but on a 15-minute basis, you can see where you're at least getting an idea not to sell the market. one time you sold the market and it hurt you on rollover, but that was rollover. Thursday after the close, we rolled over. Anyway, the long and the short of it is, whether it's Marathon Oil, whether it's the indexes, if it's got an open, high, low, close, the pivot are a very integral part of how we trade the market and look for determining factors. Now, let's look at the Russell today and say, well, what happened to the market today? And this is very interesting, because if we get rid of, and we go to studies, and I go to edit studies, and we go over here to the cogwheel once again to daily persons pivots, let's get rid of the resistance. We don't want to show that. We'll just do this. I'll just mess up my charts. So we'll get rid of all the support and resistance. That's all I do. I just want to really highlight and focus on the actual pivot point. We're going to show that plot. I'm making the width super big, and we can take a look at how it is efficient in markets. If the market is truly bearish, if it's supposed to be bullish, the pivot, it didn't act as support. Oops, that's a problem. So there was a definite change in trend in the market right there. When it came back the next day, look at the pivot. It acts as a resistance. In a truly bearish market environment, the pivot acts as resistance. The pivot, and if it's changing valuation, the pivot will act as support. When the market is below the pivot, when it closes greater than the pivot, you can look for maybe breakout momentum upside trades. Momentum upside trades. Momentum upside trades. Wait a minute, something's happening here. And now look at today's action. Really bizarre, where the market formed what we would call an engulfing pattern in equal and greater than. Why do I say equal and greater than? The market opened here, closed here, opened there, and closed more, greater than. It engulfed, and it stopped dead on a dime at today's daily pivot. If the market's truly bearish, the pivot will act as resistance. So Jerome Powell, even though the market had a relief rally, let's call it, the market failed off that pivot. That is a very strong indication that we could see continued weakness. And tomorrow, friends, and if we go over here, once again, if we go over to style, the cogwheel, excuse me, sometimes I forget myself, time axis, and we have no area of expansion to the right. If we change this to 5, let's say, it's giving us 5 periods, and hit apply, you can clearly see that tomorrow, the pivot has been recalculated for you, and that is tomorrow's pivot point. If the market closes on a 60-minute basis greater than pivot, you can look for buy side signals. But boy, by the way, guys, if the pivot holds and starts to act like a resistance, now let's take a look at short-term stuff, 5-minute trades, all right? And now we have the pivot with a 5-minute PPS indicator behind it. So these are signals and workable ways of using the indicator that has predictive powers. The tools that are here, the PPS indicator is exactly that little tool right there with these moving average lines that denote the market went up to resistance and couldn't penetrate the pivot. Remember, sometimes the pivot point acts as resistance in a strong bearish market environment. In a bullish environment, the pivot will act as support. So it's going to take a lot for us to get through this market. Now, that is what I wanted to make sure that when we went into the algo strategy room, or at least when we were talking about that in New York at the Traders Expo, that it's kind of like, I wouldn't say a lost art, but it is definitely a field in which I think a lot of people fail to remember the predictive power is, yes, the person's pivot predict the high and the low. Yeah, I get that. It's trending higher, and it gives you higher lows, and it gives you kind of higher highs, and you can see the trend of the reds making higher highs, and you can see the trend of the greens making higher highs, right? Everyone can see that. But when there's a shift in the market, if the market does not close and respect the outlook that it's supposed to be bullish, the pivot acts as resistance, it's showing there's an inflection, there's a change in valuation. And this is, by the way, the Dow Jones Industrial Average, the mini Dow futures. So again, how do you utilize this in your trading approach? Well, if the market is on a given normal day, remember, if it holds support, the pivot, you can take buy signals off the pivot support. The market will truly hold near that pivot. It will. Now, do you get clean signals? This again is a 1 hour chart, ladies and gentlemen. Many of you are not trading with a 1 hour chart. You're probably trading with a 5-minute chart. And it's been a very, I'm not here to tell you, it's not been a very easy market. In fact, the other day, let's just take a look at yesterday's trade. Yesterday's trade was, again, look, market made a new higher high. It made a low. It rallied back. I mean, this was pretty choppy and chewy all over the board, right? So the resistance was holding, but what really is important is that how is the market transitioning with today's action? Today in the Dow, that pivot acted as resistance all day long. If the market was truly bullish, it would have popped above the buy. It would have gotten above old sell signals, and you would have said, I could buy a breakout above 2,600. If it's north, it's better buying opportunity above the pivot. If it's south and it can't get above that pivot, man, it might be under duress. I hope that was a good explanation of how we utilize the Person's pivot tool. Lastly, I want to go through and we'll take a look at a couple names here and utilize what this what we call the Pmc Indicator. So this is a cannabis company. Zinner, I can't even pronounce it if my life depended on me. Now, I'm going to be honest with you guys. We didn't find this through Thinkorswim. And today, and don't feel offended, this isn't a bait and switch, but I'm going to share with you a couple little quick things because it's already here. The theory is the same with Thinkorswim. This is TradeStation. It's the same stuff that we look at that you've just been seeing. In fact, short-term trend, the pivot right here is shows up in numeric value. If we take a look at XLY, notice where it's blue. That tells me that the market is trading at or near the current day's pivot. There's the blue line. So it tells me what the stock price is, and it tells me where it is in relationship to the pivot. Anyway, what we wanted to look at is this Pmc Indicator. Now, the Pmc Indicator, and looking at it, is a relative strength tool. It comes in 4 colors, not like a Model S or like, well, kind of like a Cavalier King Charles. They got 4 different colors, if you're familiar with that breed. The Blemons, the Tris, the Black and Tans, and the Rubies. So the relative strength comes in, it identifies 4 colors. Now, I hope that you can see the 4 colors on your screen because we have red, fuchsia, blue, and dark blue. And those are the 4 phases. And it works the same on Thinkorswim. But let's just take a gander here because it's already on the chart and you can see a couple little things here. When a stock is underperforming, and when I talk about underperforming, when a stock is in free fall, declining mode, I guess you guys would agree that's a pretty strong free fall. What the relative strength Person's market catcher does, it is designed to give us an idea of the relative strength comparing the percent change of the stock to the overall market spider. And if we see a move, and so the readings, if you note here, it turns bright blue. Bright blue means that the stock, even though it's going down, it's not going down in percent terms as much as the underlying S&Ps. Now, this was back in December, the week of Christmas. A stock that is improving or outperforming relative to the market is giving you a strong buy signal. This is consumer discretionary. When a market gives me the idea that it is outperforming the market and forming a convergence pattern, it's saying that it's getting ready to rock to the upside. Rock to the upside. I have relative strength, one of the most amazing tools of comparing a stock to an underlying asset like the individual stock index. I'll repeat that. It's the most amazing tool to be able to determine whether or not this stock or this product or this ETF relative to the market is outperforming. And that's what fund managers are looking for. They're not looking to catch falling knives. They're not looking to buy the weak garbage. They're not looking to buy cheap stocks. They're looking to stay with high flying outperformance momentum names. And if you hear that term and you hear that term over and over and over again, you will say, you know, John Person said he got this tool that helps define it, not numerically, but also in color coding. And it's a zero-line histogram. This is an amazing tool. And so I don't want to bait and switch. So we're going to go back. And I just wanted to share with you that we can see it numeric value. We've created it in TradeStation first. So by do rights, it was TradeStation that I created this. We just put it on my indicator packages with Thinkorswim. So here's how you can look at this particular tool. Go up to studies, add a study, go down to my name. It's called John Person. And I don't have 1,000 indicators because I don't need 1,000 indicators. If I'm looking for a momentum and I'm looking for buy and sell, I'm going to have PPs. And if I'm looking for valuation changes, I don't need a bazillion moving averages. I use Person's pivots, and I use generally a few time frames, daily, weekly, monthly, or option expiration. If I'm checking out a stock to see if it's under or outperforming the market and I'm looking to buy, then I want to look at that relative strength tool. So this is some little marijuana company that came up in our, and I'll just so that you know, I'm being forthright. Let's double check. 1 second here. We'll go to our scanner. This morning in our live trading session, we came up with the scans. Buy signal number 4, unfiltered. This was the healthcare, and we came up, and there she blows, ZYNE. I said, wow, let's take a look at healthcare. And in the healthcare sector, you'll notice there's, I think, Insys Therapeutics is another company that's creating CBD oil. So this is where we came up with that in through these scans on TradeStation. You'll notice what's on my TradeStation scans. Person's pivots, PPs, a specialized volume indicator, and the PMC. What a coincidence. Now, let's go over here back to Thinkorswim, if I may. Here it is. So let's take a gander at this stock, and let's look at so far what we've learned. What we've learned is if a market, if it's truly bullish, the pivot points should act as support. So we got monthly here, and we could edit monthly and only put out, get rid of this, get rid of that, get rid of this, hit OK. If I have weekly, go here. Let me get rid of this. I did get rid of that. It is da-da-da-da. They're gotten rid of, and that's OK. And apply and hit OK. And now, guys, ladies and gentlemen, if the market's truly bullish, the long-term pivot should act as support. Interesting. And now we've got daily pivots. And the market yesterday, which generated the buy signal and showed up on today's scans, showed that we had a buy signal. The relative strength on this stock started to improve. You can see that it went from deep red to it starts to move up, and it fires off a bright blue. When a market is in bright blue, it shows that it is starting to, relative to the overall market, outperforming. When it closes greater than a pivot, and that's a good thing. Now, were we able to capture buying this today? Well, I tell you what, we talked about it in a pre-market session, and here's what happened this morning. It had already been in a buy signal. It opened and gapped higher in the market, and it did nothing but trade up all day. So we can run scans for our PPS buy and sell signal, and we can combine a couple things. If the mathematical model suggests it's still bullish, if the pivots are higher than a higher time frame pivot, if you like the volume, and if its relative strength is outperforming the market, then this is a category of something that you would want to have exposure to on the long side, right? So, I mean, there's a lot of things that right now, if we take a look at scan right now, based on today's end of day scan, and I'm going to run this, and we'll wrap this up real quick. Using Thinkorswim scan to find opportunities is amazing. And this is a whole new session, but let me just share with you how we look for scans. So using my work, I would go add a filter for stocks. So we don't have anything. There's nothing here on the board. Let's just pretend we've got nothing. So the first thing I do is I add a study filter. And then your box, let's get rid of volume. Let's get rid of this. We'll start really from scratch. So you want to add a study filter. And first thing that comes up is ADX crossover. Click on the little button. Go to licensed studies because it's licensed. And let's go to PPS sell signals for right now. And we're going to go PPS sell signal. Now, what are we scanning? We're scanning for, was today a really good day or a really bad day? I don't know. Let's find out. We're going to scan for a category. What category? Well, let's look at the S&P 500. And so for that, we'll go to R through W. And if R through W, we're going to go S&P 500. You know what? It's one thing to be down on the day. It's another thing if we generated a sell signal today. And oh my Lord, this is the S&P 500. And we have 91. That's almost 20%, 18 to be precise, I think. 18% of the S&P 500 generated a daily sell signal. Airline stocks, so you got air freight, you got, well, let's review. Transportation, not good, besides FedEx, of course. We've got financials, banks today, so obviously the banks didn't like what had to be said. Most of the banks are regional banks too. I know because I know these symbols. Keystone, PNC, SVB Financial, Zion, you guys know that. That's all the regular cast of characters. And then if you look up here, IT services, insurance, capital markets, that's the sector that generated daily sell signals. How about buy signals? What generated buy signals today? If anything that generated a buy signal today, that might be pretty good as an outperformer. Let's double check. Go to buy signal. We have S&P 500 and I hit scan. One stock. Let me see. I'm going to make sure. Maybe this is broken. S&P 500. We want to go through S&P 500. I'm going to go for, maybe I hit the wrong thing. Buy signals, PPS. Hit scan. One stock generated a new fresh daily buy signal. Oops. So that, my friends, we can also, by the way, validate that by taking a look at our radar screen here at TradeStation, and which, by the way, collates those little PPS buy signal right here, daily signals. For the record, today's action generated a fresh daily PPS sell signal in the Dow. We generated a fresh new sell signal, if I'm not mistaken. Daily, if it's blinking, it means it generated a daily sell signal in biotech, in Russell, in the Spider. It didn't quite follow through because the after-hour market's not closed. So it's warning of a potential sell signal. The financials, the XLF, now that's pretty ugly. The XLI, industrials, ugly. Staples generated a sell signal. Healthcare, XLV, did not generate a sell signal. Interesting. And we go on down the list, and we see that many of these sectors have already been in a sell signal, like materials generated one yesterday. So when I look at the tape and I go, well, the only thing that really looks good today in terms of performance was actually in relative strength terms, if it's red in this column right here, And this is the relative strength PMC indicator. If it's red, el no goodo. So let's take a look at regional banks because it's at the top of the weakest. It's the worst sector. And in fact, this was the intraday. Here's the end of day. So let's go up and look at the end of day. Regional banks. Here's your regional banks. Whoa. So regional banks, by the way, this is where the tool is the most helpful. Regional banks rallied the last couple weeks. And on that rally, this was telling you, and I hope you guys can see this because this is a very important lesson. This is what we teach in our trading courses, and we sit down at seminars. Man, we go over this stuff expressly. So I want you to pay attention closely. This is very important because this is what most institutional fund managers in one way or another have something like this tool. Now, I didn't invent relative strength. I just recreated and made a better mousetrap in understanding relative strength, putting a moving average component, filtering it out, and identifying that markets turn in stages. It starts to weaken, it starts to lag, it starts to improve, and then they outperform. Those are the four phases. And the four phases are defined by these colors. Improvement is fuchsia. Outperform, bright blue. Starts to weaken, dark blue. And then lags, turns negative, ugly, when it turns to red. Red, el no goodo. Red, bad. Red, muy malo. For those that are as Spanglish like me. And my wife is Spanish, and she'd kill me if she heard me butchering the Spanish language right now. So as many of you know Mary. Muy malo. Está no bueno. It's no good. So this would be not like, can we buy a put? This is more like, I don't want to be exposed to the long side of the regional banks. So looking at the market, the next question that I would say to myself is, what's the volume? The relative strength's weakening. Well, what's the volume? Well, this is a proprietary volume tool. It's a little bit better than on-balance volume, I'm here to tell you. But it shows, on-balance volume shows a newer high. Some might feel that it supports that level. But the relative strength says it's weakening. So in this case, you would definitely want to trust, obviously, the relative strength tool rather than on-balance volume. But this volume indicator, it's worth its weight in gold. This thing defined a weakening condition in the market. As you can see, it really did highlight and match up with a PPS sell signal. That is just crazy. Now, I'm not saying that this gives you the best signals, but I would tell you this, MRO today, the relative strength, the volume, unlike regional banks, what side of the trade do you want to be on? A stock that holds pivots, a stock that it's outperforming, and a stock that has accumulation in volume trend. And that, my friends, is MRO, and that's probably why it generated a buy signal. So it's not having more indicators in your toolbox. It's understanding the right tools to do the right job. That's the key. For stocks, PMC is wonderful. It's amazing. For all markets, volume is still the lifeblood of the market, and I believe that. And there's all types of different traders that identify volume. But what we do is, I try to do in each and every trade, and nothing is 100%, but I'm looking to give an edge in the market. And if I can avoid landmines, that's what I'm trying to do. I'm trying to avoid landmines. If trading was easy, and everyone in my email says it is, but as you know the truth, it's not as easy as it seems. But right now, a couple things. The strongest sector on the board right now after today, or the one that's improving the most, not that it's really strong, don't get me wrong, is XOP. It actually outperformed relative to the market. The relative strength is seeing higher bars. And if they finally fire off and give me a bright blue, if they fire off and give me a relative strength reading, I have a feeling with the right volume condition, we could see then finally a accumulation in the energy space that has been lagging so far this year. So the market today, and just hindsight, and not hindsight, but just to wrap it up, this has nothing to do with today's but just as an idea of the market condition right now, I want to take a look at a couple of our top stock indices for you and to say, what is the condition of this market? First thing, let's look at the Russell. What runs the roost of the Russell is it has a lot of small cap banks, or shall we say regional banks. And you just saw that the regional bank sector looks ugly as the dickens, right? Now, we are at an important crossroad of pivot resistance in the market in the Russell. The advanced decline on the Russell, this is how many stocks advancers versus decliners, the cumulative advanced decline, is not really showing that the market is in a death spiral yet. It would if we start to see the advanced decline making a consistent trend of lower highs and lower lows. It would lead the market like it did back over here. And then so if we start to see the rollover, and quite frankly, it's a little troublesome right now, but we don't have that rollover. So we need a few more days of evidence to see if there's more meaningful correction in the market, or is this the garden variety pullback? Let's look at the S&Ps. Now, this is the advancers versus the decliners. All day today, even after Jerome Powell, we did not really see an appreciable change in the advanced decline. This is the advancers, cumulative advancers. That's the cumulative decliners. You can see the decliners are outpacing the advancing stocks in the S&P 500. Today, we absolutely saw a breakdown in the advancers. You can see the trend moved lower. Now, again, I don't have enough evidence to support if this is a true-fledged breakdown that's going to turn to biblical proportion or another garden variety pullback. But if we start to see another day or two of the advanced decline line weaken, then it gives you and opens the door that over time, and that's probably why they say minute tops take longer to form than bottoms. And I don't think that we're coming to the big pullback of October yet. I mean, I don't have that evidence right now. But as long as the market remains above its longer term pivots, it's supportive. For me, I would be very concerned, and you can watch this on Thinkorswim, if the daily spiders close below the monthly pivot. And I mean, that is a little ways away. But if the daily close is less than monthly pivot, obviously the advanced decline would weaken. Baby, that's going to open the door for a deeper correction. So the pivots, as you can see, when the daily closes below, like it did in October, the monthly pivot, you want to be prepared for maybe a stronger pullback. After all, just like over here, when the market's truly in a bullish bias, the monthly pivot acts as support and the market will move up. When you close less than a higher time frame pivot, bad things happen to those who are long. With that said, I thank you for your time. I hope I gave you a little bit of insights. I know the cost of admission was the right price, and I think that it's a better understanding for all how to more efficiently use pivot points and the person's pivot and put it all together to help you make better trade decisions without information overload. If I'm going to buy a stock, there's a couple questions I want to know. Is it trending higher? Is it outperforming relative to the overall market? And does it have strong volume accumulation? If I've answered yes to those three questions, then I can place an order to enter, manage my risk, and identify what my position size is. If the trade is worthwhile, it will reward me. I thank you very much for attending today's presentation, and I hope everyone had so far a good year. And I look forward to the next time we meet. I truly do. I enjoy helping people utilize better tools in this environment. It's a pretty crazy world we live in. And by the way, I'd much rather do this, no offense, than get on a plane, train, automobile, and go to an expo. Besides, my little puppy Sita missed me. So thank you all very much, and we'll see you the next time. Thank you.